and they are ready to launch. So for me, it's one that I really keep an eye on because I don't want to miss out. I missed out Kaspa. I think Convex has the potential to do probably just as well. And I think if you've seen Arweave recently, since they've announced that the compute layer on top of the storage, people really love that. So I think Convex will do quite well there. I made the mistake when I found out about Kaspa of not investing right away. It took me quite a while to get into it. And things since Kaspa launched, they grew 63,000%. So definitely something to not overlook when a new kind of layer one comes out on the market, something that does something a bit different. So in the case of Kaspa, one of the reasons why they were so successful is because it's a DAG kind of a structure. So that means you can have many blocks being processed in parallel, as opposed to like Bitcoin that is just each block is sequential to the next. So it's more like a kind of a, I would say, a SQL database. This is why Kaspa is so much faster than Bitcoin, and it's kind of a Kaspa is kind of a competitor to Bitcoin. It's not really meant that much for other things, but like it's performed really well in terms of adoption and all that stuff, and it has other interesting part in terms of consensus algorithm and all that stuff. So Convex is the one I wanted to talk about today. This one is quite a lot more optimized for storing diverse type of data structure, kind of like Kaspa, where it's kind of a DAG. This is kind of similar to a DAG, but they call it a lattice technology. So it's something that has been used in the computer science industry for quite a while, but now they managed to adapt it for the crypto industry. So typically speaking, they don't consider themselves a layer one, but they kind of are, in my opinion, because you can build a decentralized app on top of Convex. They haven't launched on mainnet yet, so it's really early stage. And then, so like, let's talk about this graph data structure that each node, in their case, each node can be a different data structure. So you could have like a hash map on one node. You could have an entirely different graph data structure on a separate node. You could have just a video file on another. So it enables you to store very diverse kind of data, a little bit kind of like CouchDB, which is more like a NoSQL database. But in this case, it's more like a graph. And because of this, they're able to achieve 120,000 transactions per second on testnet. And this is faster, twice as fast as Solana right now. So that's interesting in terms of speed. It's interesting in terms of a data storage, because it's not just kind of transaction data of just, like sending crypto to someone else and all that stuff. You can store all kinds of data into this, and because of the speed, it's a lot better than Filecoin in terms of storing data in order to process for AI technology. And kind of like Arweave used to be just storage, and now they've implemented and released another layer on top of Arweave that is for compute. So Convex has a compute layer as well. In their case, they're using the Clojure functional programming, and this is instead of using Solidity. So Clojure has been around for many years, and people who like functional programming really like that. But the point is that you're able to use that programming language to write smart contract on top of Convex as well. So you can write a decentralized application on top of it. And so what really got me interested about this one is because Mike Anderson is their CEO. And Mike was the first CTO of Ocean Protocol. And Ocean Protocol is $1 billion project in the AI space, in decentralized AI. So that's quite interesting there. And saying it's been around AI industry and all over the place in the crypto space for quite a while. So he's a really solid person to. It's not like just a like people who slap an AI keyword on everything. He's been around a really long time, and he's building Convex for the past 2 years now, or actually 3 years. And they are ready to launch. So for me, it's one that I really keep an eye on because I don't want to miss out. I missed out Kaspa. I think Convex has the potential to do probably just as well. And I think if you've seen Arweave recently, since they've announced that the compute layer on top of the storage, people really love that. So I think Convex will do quite well there.
Yeah, as you're talking, I was thinking to myself, why does this project sound so familiar? And I want to say about a year ago, I actually approached Mike and
Okay.
to have a conversation with our engineers because our engineers wanted to take a look at the tech, and I joined their Discord server. Um, Mike and the rest of the team was very attentive, like from a community perspective. So one of these days, I think it would be interesting to get Mike on the show and learn a little bit
Yeah.
more about what he's working on. But when can we expect the TGE, and is this um, going to be, do you know if they're going through a raise, or is this all, because it is still proof of
Yeah.
stake, is that correct?
Yeah, it's built on a proof of stake. So they do want to raise money, but they don't want to do it for Convex. For them, they think Convex is a public good technology, and they want to raise money to build companies and decentralized app on top of Convex. But they don't really want VCs involved in buying token of Convex necessarily directly. So they're really conscious about making sure that it's decentralized as much as possible, and they don't want a VC that would own a large chunk of the token supply. And the thing they also, I discussed price-based vesting in the past. So they are considering having something similar to that in terms of the token supply and release. It's not so much vesting, but more the distribution of the token would unlock more as the price grow, which is something I've never seen before. Because everybody tried to do this based on time, but if market adoption is low and then you release more token, you kind of dilute your value. Meanwhile, if the token get released and distributed into in circulation just because the price is increasing, yeah, the price has to push through it in order to get released, basically. So that means that you're adapting your circulating supply based on market adoption, which to me that's the right way to do things like that. If you look at Kaspa, they have a released mechanism that is exactly like Bitcoin. So they have a halving model based on 4 years. But saying if market adoption is slow and then you produce a lot of and you distribute more into the wild, that could cause a problem. Meanwhile, if the token get released only because of market adoption and price increase, you don't have those same problem. If market adoption is low, those tokens don't get released at all. It's gonna be postponed maybe forever. So to me, I much prefer a model like that. And I've never seen any crypto project using it. So they are the first who are considering doing that. And in their case, they don't really want to launch with a big bang. They want to kind of get released and organically grow a bit like Bitcoin. When Bitcoin launched, they didn't have a million users. They grew organically with a very small community at first, and it grew over time. To me, it's a much more sustainable that way. And that's what
Mhm.
crypto investors and the crypto industry don't like. But to me, it's a much better and sustainable model to grow and to launch. So I like their approach a lot more, to be honest.
And it sounds like this is a little bit more of a longer term approach, right? Because as you said, they're not trying to go out with a big bang. And maybe perhaps that could be a reason why they don't necessarily have the traction as some of the other technology that is considered to be top notch, right? This technology could be just as well uh, great, but because they're going about it a little bit differently, maybe perhaps it hasn't caught as much attention.
Exactly. I think for me, I do want to get implicated, and I'll most likely build some technology on top of them because I really like what they're doing. And I think, as I said before, it's
So
extremely hard to find good AI projects that are decentralized. And Mike is very much aligned with me in terms of making sure that it's not controlled by a single entity or handful of people. It has to be as widespread as possible, and the AI models have to be widespread and economically provide value to the entire community that use it. So I really like their approach and their philosophy and everything about it. So
You mentioned it's early, but how can people start to get involved with Convex and, as you said, to take advantage of it if they missed out on Kaspa?
yeah, so you can create an account here and join their Discord and all that stuff. And if you're a programmer, you can just start looking at building technology on top. That's one thing. Otherwise, uh, if you don't have programming skills and you still want to get implicated, they don't have a large marketing team and or any of that stuff. So I think just getting implicated and promoting them, uh, it's not clear you'll get like token as contribution, but I would think they would be happy if you bring value to them and if you get implicated because it's a very small community right now. So I think if you get involved, you'll get to stand out quite a bit. It's not like you're joining a project like Venom that had like 10,000 people on the Discord. Yeah, like if there's just maybe a few hundred people and you're a bit active, you'll stand out compared to the rest. So, and I think you can build your a little bit of like a clout doing it that way, and then you'll be ready to get into it as soon as they launch.
And what kind of projects can we expect? Or, for instance, what kind of project are you wanting to build on top of Convex?
But for me, I introduced them already to another project that is to build a influencer platform. So it's not just about AI, because of the speed and the storage mechanism and all that. It has advantage to a lot of different kind of industry or use case. So that's one of them. For me, I'll be interested definitely on trying out some AI technology. Um, and like I'm building a staking pad and a market making service and all that stuff. I'll probably migrate my technology stack on top of that as well to support the ecosystem. Because if it was just the technology alone, yeah, I think I would be interested. But I think because Mike and his previous experience, I really think it will do well. So even though it's small and early, I really think getting involved as early as possible is probably a good option because I think it will do well.
Yeah, and now you got me all excited about trying to get Mike on the show. So I'm gonna work on
Yeah,
that and get him.
definitely. I spoke to him, and of everybody I spoke in the industry, is he is extremely knowledgeable. So
He is. Yeah, I remember when he got on with some of the engineers that I work with. It was a conversation that was way over my head, but I could tell he knew what he was talking about. So, uh, anything else to add on Convex before we move on?
I think not for the moment.
Okay, great. Well, this is a great catch, Patrick. I'm glad that you brought it to our attention. I want to shift gears a little bit and talk about the overall market. The other day we were talking about some of the liquidation heat map, and you kind of called it. You said that it was going to go below certain levels, and it did.
Yeah,
And we bounced up a little bit, but overall, what do you think is causing this pressure downward? Is it the CZ news?
yeah.
Is it just the inflation update from the United States, or what is it that's causing the pressure downward?
Yeah, it's a combination of factor. And typically speaking, when you see a lot of bad news coming up always at the same time, you have to wonder, is it a coincidence or it's kind of a little bit arranged to make it look bad so that the big money can come in at a cheaper price. So I don't exclude market manipulation out of the question. Um, so before we talk more about this, you know my grid bot that I activated like 2 days ago with you? Um, so I'm in the negative because the price of Bitcoin went down. But meanwhile, I did create 0.0012 Bitcoin, which is 0.79% in the space of 48 hours. So when you look at this,
And this is the
that
Coin
means
M
that,
future, is that correct?
yes, yeah, exactly. So right now it's just keep accumulating Bitcoin. So in this case, I don't really care the US dollar value of it. for me, I'm calculating my return based on how much new Bitcoin I'm producing. So we were saying that if I put $20,000 into this, right now it's basically 0.395% per day at this current rate. So that means that it would take me 2 years and 9 months to achieve 1 million at this speed. So it's a little bit slower than I wanted, but if you look on a 1 year period, this is with compounding daily. It's basically 321% return per year. And right now, the price of Bitcoin is decreasing, but once it starts to increase, that percentage will skyrocket. And this is why I don't think it's gonna take 2 years and 9 months. I think it's probably much closer to 1 year once the price of Bitcoin goes back up. So in terms of the economics, let's see. So I think one of the biggest reason why the market crashed so bad is this. If you look at the Bitcoin ETF flow, yesterday, even BlackRock for the first time had negative flow, and in total it was 563 Bitcoin or US. So like basically $500 million of flow of outflow, net outflow that came out. So that's pretty bad, and I think it's a lot of people are afraid of what's going on with the economic, between Japan and the US and like other places. I'm not sure which news of CZ you're referring to. Maybe I missed that one, but I'm not sure. Like, I think it's a combination of bad news together, and this to me was kind of the worst. It looks pretty bad. There was the FOMC meeting about the interest rate yesterday as well, and basically they are saying that it might be unlikely that they're gonna lower the rates this year because of the situation that inflation is very sticky, and even though the economic macro is not going so well, employment is good and all that kind of stuff. So I think it's a combination of factor that makes it that the market went down. And if you recall, we can take a look at also the liquidation map. They really love to liquidate as many traders as possible. That's why, for me, I think it went down further than it should have. I think it was just to liquidate as many traders as possible. So yeah, so like the April 30 here. So when it started this downward spiral, you see how much liquidation has happened. I think it was more than $1 billion in total that got liquidated. So definitely there's money to be made by pushing the price down, and that's typically the market makers who do that. But in this case, because the ETF flow was negative, this could have also caused part of the decline. But I think the ETF flow, it may not affect the market directly because the ETF is under the custody of Coinbase. So that means that when the ETF are selling Bitcoin, it's basically Coinbase that is probably just accumulating more Bitcoin in their treasury. So I don't think they are selling it on the open market because they were starting to run out of Bitcoin to fulfill the demand of the ETF. So I think they are probably going to keep it as opposed to selling it on the market. So I'm not sure how Coinbase managed their treasury, but I think I'm not convinced that this downward pressure was directly the Bitcoin ETF. I think it was just the market makers pushing the price down for the most part and then triggering liquidation, which caused a cascade effect. Because retail investors, I don't think they can move the market that much, to be honest.
But I'm sure part of the plan is maybe to shake some hands, right?
Yeah.
To scoop up some cheaper Bitcoin, because this to me feels like the last. I mean, we might be trending sideways, like you mentioned, but this appears to be it could potentially be the last leg down before we go to new all-time highs.
Yeah, but for me, I loaded up a bunch of limit buy orders at $55,000 like here, and then all the way down to 50. So I loaded up a bunch in case there's a quick wick, like just like a very sharp wick that goes down deep. and then recover really quickly. So I put a bunch of limit order vastly below price just in case I can snatch a little bit there. I think I'm not convinced that it's not gonna go there. I think okay, so over the past, typically speaking, in a bull market, we see uh, the Bitcoin going down sometime up to 30 to 40%. So we can look at how many percent it's been since the top, and you'll see that there might still be a bit of room to go down. I think we're at 23%. And 23% is basically the most dips. This bull cycle has been about 22% so far. But in previous bull cycle, like in 2017, 2021, like sometimes it goes as much as 30 to 40%. And it turned out that 40% would bring us to 43K. I think this is not probably going to happen, but 30%, it's around 52. You see, there's a lot of confluence here around this zone. So that's why I think it might not be over yet.
I'm looking at your chart, and it looks like the RSI is pretty low. Do you
Yeah,
feel like now would be a good time to start accumulating?
yeah, it's not bad. But as you see, sometime the RSI could be below the 20% and stay there for quite a while. Like in this case,
Mhm.
let's see here. So that was 133 days. So the thing it's not because it's there that it's gonna bounce back right away. And the thing, previous post-halving accumulation period, sometime was between 2 months and 5 months. So that could take us to June to September. So, and if the ETF demand is definitely slowing down because of bad economic, I think what could kick back things into gear is just global liquidity. If the money printing machine starts in Japan, that's one thing. Meanwhile, um, if the ETF start to really kick in again. But right now we had the first outflow of BlackRock yesterday, so maybe it may even the large institutional investors may be a bit skittish at investing when the price is down. Maybe they want to wait until the things start to pick up again. So one thing that could kick things back would be if bank start to collapse again, and that doesn't have to be the US one. Maybe it's in Japan or elsewhere. So that could be something that we've seen happen last year when the US bank were starting to collapse. The Bitcoin started to pump. So that could be something that get us back into shape. But right now, it's not yet on the horizon. So yeah, for me, I'm bracing for the worst. If things pump again to 74K, I'll be happy. But I'm not sure we'll pass 74K just yet. I think I would expect maybe a few more months of sideway or potentially even going down to the 50, 52K region. And I
Sounds
think it would
great.
be a crazy experience if it would go to 44. I really don't think it would go that far. Two strategy to make money is, for me at least, it's using those grid bots on really mature crypto asset like Bitcoin and like Ethereum. Maybe Solana at some point I'll start to do soon. But the other opportunities to invest in very early stage crypto project, and ideally if you can snatch them before they even launch, that's even better. So for me, that's what I'm trying to accomplish with Convex, with some of the other we spoke to recently. Like if you can find really good crypto project before the launch, like through a launch pad or just getting involved with the project, because if you have some expertise of some sort, you can help and you can secure a bit of token that way, or potentially just invest some money into it also.
Yeah, the opportunities in the space are abundant. There's so many
Yeah,
different ways to generate money. You can farm, airdrops all the time. You can work for a company. You can start your own company. It's just like so many opportunities.
okay. It seems that compared to what people got from Jito and what I got from Uniswap last bull cycle, that was amazing. So Arbitrum, I missed that one, but Maybe Linea will be good. I don't know. But again, Linea has a lot of VC backing them. So if they pull a Eigen layer, that's not so good. So for me, I'm almost tempted to start boycotting a project with large VC backing that got in like a very cheap. And like the VC behind the Eigen layer, I think I'm gonna start tracking where they invest and avoid the same project. Because I think we have to stand out and fight.
We
Yeah,
had this conversation
yeah,
before. We had this conversation about tracking some of these
yeah,
VCs. It's double-edged sword, right? Like I have a lot of friends that work in the VC space, and they do great. They're very knowledgeable. They support projects, right? So on one hand, there's a lot of support for the projects, but the problem is that it's at the detriment of the
yeah.
retail, and that's where it starts to get a little bit dicey. There's really not. I don't think anybody has created a solution yet where you can kind of have the best of both worlds.
Exactly. I think most VC fund, you might not be allowed to be a LP in them simply because you would need to be an accredited investor. So if you just have a few $100s to try to come out of poverty, it may get a bit tough to get some exposure to some very early stage thing. It's really risky, but I've seen it. I've seen it. People putting $70 in project, and then a year later, like they had $34,000. So when you're at poverty level and you have
Yeah.
kids to support and you struggle with jobs and all that stuff, it's nice to see that. And that to me, that's why I like the crypto industry. There's lots of perils too, but you don't see this happening elsewhere.